What's up guys and welcome back to Wall Street Millennial. Today we have a lot of gains and losses to go over, including some big numbers from both weed stocks and leftover from GameStop. We'll also be keeping track of the biggest gains and losses today, so make sure to stick around to the end. Without further ado, let's get into the first loss. First up we have user Stop Playing, who was fully invested in calls on GoDaddy. GoDaddy is a website famous for providing domain names for people to build their own websites. They advertise that their platform helps small businesses build websites, host their websites, and offers customer support that is easy to use. The stock has been a strong performer over the past several years and has bounced back strongly during the coronavirus pandemic. However, even the strongest of performers can have off days and weeks, which is what happened to GoDaddy on February 15th. Unfortunately for the OP, his calls were already out of the money, with $100 strikes and only a week till expiry. Now they are about 15% out of the money and they have lost almost all their value. This 99.31% loss is tough to swallow, but it helps others handle their own losses. Also, the remaining balance on his trade adds value to this post. As far as what to do with GoDaddy stock going forward, there doesn't seem to be much going for it. It might be a good company that just spins off cash with very little expenses, but it definitely just seems like a tech bubble meme stock. Next, we have a very sizable loss on GameStop. User Aloha Trader had more than $41,000 in GameStop stock in out-of-the-money calls. He bought into his stock position at $155 a share for 25 shares, or a total cost basis of $3,800. For his options position, he bought 320 strike calls expiring on February 12th for 3 contracts. All in, these calls cost him $37,000. Now, GameStop is trading at around $52 a share, and obviously his calls expired worthless, making his $37,000 investment a total loss. On top of that, he has lost 2/3 of his stock investment, with his total losses on his GameStop portfolio adding up to $40,000, or 98%. Some commenters lament the OP for being stupid to backhold even after GameStop 100x at $500 a share. CTJ Lewis says he's glad that Wallstreetbets is finally freeing itself of its GameStop obsession, now that people like the OP are, quote, getting what they deserve. Other users are more sympathetic, appreciating the post as quality loss porn. Good luck on your future plays. Aloha Trader, with a $40,000 loss, is now the top loss today so far. Next up, we have some high-quality loss porn on weed stocks from this highly upvoted post from user Bit of Difference. He says he was in on Tilray, Afria, and lots of calls on those 2 weed stocks. Unfortunately, his timing seemed to be off, and he lost more than $200,000 on his bet. Tilray has been a strong performer over the past several months, going from being a $5 stock to trading at well over $60 a share just a few days ago. But as with any high-flying stock, bad timing can turn a good trade into a bad trade. After losing more than half its value in less than a day, and also joined by Afria and other weed stocks, that led to many calls expiring worthless on February 12th, and this user's account taking a nosedive on market open. The comment section seems to appreciate the nature of this loss and not take too seriously the fact that the OP just lost enough money to buy a brand new Ferrari. Other commenters support the general sentiment around weed stocks, saying that it's a long game and that if you have the diamond hands to hold until legalization, you will be handsomely rewarded. One presumably new Wallstreetbets user seems concerned about the OP losing this much money, but user Jeannie Ann DeCans points out that it's likely that this loss was on a lot of previous gains, given the run-up in weed stocks leading up to this loss. Even if it is just losing your previous gains, it's still gotta hurt. Sorry for your loss, Bit of Difference. With this $200,000 loss, Bit of Difference has taken the top spot on our leaderboard. Next, we have a trade that was apparently so awesome that it was removed the first time that real nobody at all tried to post it. He lost more than $50,000, or 95% of his portfolio, on GameStop and AMC calls. On January 26th, he entered into 10 calls on AMC with $5.50 strikes expiring January 29th, and subsequently exited the position on January 27th, the next day. During that 24-hour period, AMC stock jumped 300%, going from $5 a share to $20 a share. Unfortunately for the OP, he was not long those calls. He was trying to Theta gang and pulled a Melvin by shorting those calls instead. When he was forced to close out of his short by buying back those calls at the top, he lost the entire investment. The same exact thing happened with GameStop, causing him to lose another $41,000. Naturally, the comments are not sympathetic to the OP, since he did kind of take the side of Melvin on the trade. It's one thing to miss out on a trade of a lifetime, it's another thing entirely to take the wrong side of the trade of a lifetime. Sorry for your loss. Although the $50,000 loss only puts this user at number 2 on our leaderboard, the way in which he made these losses makes him just a little bit special. Next off, we have user 1% Max, who made an impressive 500% or $209,000 gain over the past year by playing high-flying Wallstreetbets meme stocks GameStop, AMC, and Virgin Galactic. But the way he made these gains was not in the traditional Wallstreetbets style. Instead of buying FDs on these stocks, he actually did the opposite and sold FDs. He calls himself a member of the Theta gang and has been wholesaling FDs to the Wallstreetbets community for more than a year. It is quite surprising to see Wallstreetbets' level of gains from a Theta gang member because selling options is generally considered to be a relatively low-risk boomer strategy, where you are unlikely to make massive returns and also unlikely to lose everything. When you sell calls or puts, you collect a premium upfront in exchange for the liability of buying or selling the stock at a certain strike price. By selling calls on a stock, you are still taking a long position on the underlying stock. If you sell a covered call, you will still participate in the downside if the stock goes down because you have to own the stock to collateralize the call. If you sell a put, you incur a loss if the stock decreases below the strike price. So whether you are buying calls or selling covered calls or puts, you are still taking a long position on the stock. The only difference between the two strategies are the risk and return profiles. If you buy FDs, you risk losing 100% of your position if the stock doesn't reach your strike price and the option expires worthless. This happens quite often and is the cause of the vast majority of the loss point on Wallstreetbets. If you sell options, on the other hand, even if you lose money on the position, your losses are limited because you already collected the initial premium as cash, and your percentage loss on the position will never exceed the percentage decline of the underlying stock. And while buying options carries high risk, it also carries commensurately high returns. Buying FDs carries a possibility of losing everything, but also carries the possibility of 10xing your money in just one day. These types of gains are impossible with lower risk strategies of selling options. The implied volatility of an option is a proxy for how much premium you'll receive for selling it. The fact that the OP was able to make such massive gains by selling options is quite surprising. He was able to do this by selling FDs on the most volatile meme stocks of 2020. The more volatile the underlying stock, the more premium you'll get for selling the option. The implied volatility is a proxy for how much premium you'll get by selling the option. To see the difference between meme stocks and boomer stocks, take the example of GameStop and Coca-Cola. Coca-Cola calls have an implied volatility of 17%, while GameStop calls have an implied volatility more than 10 times greater at 173%. So you will make far more money selling FDs on meme stocks, and that's exactly what the OP did. His Theta Gang strategies have worked well, and he has no intention of changing up now. His current positions are put credit spreads on volatile meme stocks GameStop, AMC, and Virgin Galactic. While his gains were certainly impressive, it's important to remember that he did take on real risk. The money he made in 2020 was only possible because the underlying meme stocks went up in value and the options premiums were very high. This situation is not guaranteed to repeat itself in the future. With this user providing the only gain in this week's video, here's the final leaderboard for this week. Alright guys, that wraps up for this video. If you like this content, make sure to like, subscribe, and share. If you have any recent gains or losses, let us know in the comment section below. Also check us out on TikTok and Instagram, links in the description below. As always, thank you guys so much for watching, and we'll see you in the next one. Wall Street Millennial, signing out.